Hey everyone, John Henry here, SlingshotFutures.com. Today we're going to be taking a look at a long-term market outlook. Now, the long-term market outlook, what I'm looking at is a 60-minute chart. I'm just using Heikin-Ashi candles just because it's visually a little bit more appealing than the standard 60-minute candles. Makes it easier to kind of see the swing highs and lows. And as you can see, there's a lot of stuff drawn on here. But really, the big thing that we're looking at on the longer term outlook on the S&P, starting off there with the US indexes, the S&P, we have a nice move to the upside. We put in that bottom in, basically Christmas of 2018, and going into 2019, it's been nothing but bullishness. Now, does that mean that this is the bottom and we're never going to go back down again? Not necessarily, but we do have a nice bullish move on our hands. And really the big thing to keep in mind here is as long as this bullishness continues, pullbacks are totally fine. Today is a really good example of what I mean. We're seeing the markets getting slapped a little bit today to the downside, as you can see by this pretty big bear bar there, or a couple of bear bars. But really, everything is still kind of intact. The concerns are that we have a lower high compared to the previous high, but we're still forming higher lows. We still have bullish channels going on. There's still bullish support. There's a lot of stuff going on that is still showing signs that the buyers are trying to support the market. Now, if you've been following along with me for a little while, you know that I would love to see the S&P push down to another new low. I want to see this thing fall apart because I want to buy some stuff on the cheap. But aside from sounding too selfish, really the big thing that I'm looking at here in the short term is that this move down seems really, really heavy when we're talking about today's movement, or at least the past couple days. And when we're moving down that aggressively, one of two things is going to happen. It's either the beginning of a big, big move, or we're dealing with a short-term pullback before another attempt at the highs. This, to me, on the S&P with a lower high, talking about over here, we have a big lower high, and now we're seeing some heavy selling pressure to the downside. Chances are we're probably going to go sideways for a little while. I'm not expecting this to go absolutely hammering to the downside because there's just too many levels of support. Now, when we're talking about support, we have a few different variations that we can look at. And right now, the obvious one is that giant thick line that's floating through the middle of the chart. So what is that? Well, if you go back, we can see that that is a structural level of major importance for basically all of 2018. Well, not all of it, but back into October easily. And if we go back further than that, we can see that level continuing to act as support and resistance for quite a while. So that's where that level's coming from. We have a bunch of lows down here, a bunch more, and every time we've come into this zone, it's gotten really, really supported or gross, like we saw here. Seems as though the market did respect it very nicely, and now it broke above it, using it as support, using it as support, using it as support, trying to get away from it, but it's not breaking higher. And that's the big concern that we have right now, because it's not breaking higher, and this is supposed to be a major level of resistance, and if resistance breaks, it turns into support. But where's the follow-through? There's no follow-through coming in on the S&P, and that's giving us some clues that this might be the beginning of a larger downturn if this level starts breaking. Right, so 26, 27 and a quarter. We also have rising wedge support from the previous lows. We also have falling resistance, which is now support, all in the same place, not to mention the fact that from low to high, we have a 786 Fibonacci lining up smack in the middle. And if we look at the shorter term, we also have a small little shelf that was formed inside of this cluster of price action. There's a lot of stuff here. Right, so even though we're coming into today and coming in and starting off the week with a huge move down, the buyers have a real shot here to defend. If they don't, that's where we're going to start seeing some troubles. Because if that starts cracking down, then the next spot isn't going to be until 2,600, a full 30, 40 points away. And if that breaks down, then we could be looking for a retest of a spike in channel. And that's a very common occurrence. When you have a spike in channel, the markets love retesting the lows of that. And that's all the way down at 25, 23 or so. So if we start breaking through some of these levels, it's a wide open door on the way down for the S&P. It's just a matter of areas of interest. So right now, the big area of interest, 26, 27 and a quarter, this big white thick level inside of here, because it's combined with 4 other levels. If that starts breaking down, the next major area is going to be at right around 26.12, 26.13. And then from there, we have a swing trap low at 96.5. Of course, 2,600 is floating right around inside there. And if that breaks down, then, maybe they find some support around that 25.63, 64 area. Otherwise, looking all the way down at 25, 23, 24. So the S&P is in a pretty important area of interest here. It's just a matter of whether or not it's going to be able to keep the train going or not, if they want to try to support this or if it's just going to end up falling apart. Now, as a side note, we do also potentially have a wedge top forming off of those highs, and that gives us another level of interest if the market does want to bounce back. They still have a shot. You never know. Over on the Dow, we have a very similar situation. The Dow and the S&P are basically brother and sister when it comes to the overall movement. But the major level of support in the Dow is a little bit further down. 24,256 is that level of support. Now, the big difference here that we have with the Dow is that it's broken through a lot of those levels of support that the S&P did not. We have rising wedge support in the form of 4 different wedges. We've got a wedge over here, 2 that came from farther away. And we also have a shorter term one on the channel earlier. And they're all stacked up in the same place, roughly, and it's broken through all of them. So the fact that we have such a strong breakdown in this type of context could easily show that the buyers might just be looking for a short-term bounce back up into resistance. Notice how many things are stacked up in the same place here. Horizontal resistance, retest of support as resistance, retest of support as resistance. We also have falling resistance from earlier. I mean, there's a lot of stuff going on in that zone, and that's going to be right around 24,560 or so. The same analysis really holds true here for the S&P to the Dow because they are very similar in that we have a lot of major support, but if that support starts breaking down, we could be looking to open the floodgates and see the markets really get hammered. So a couple areas of resistance, obviously we just talked about them. 24,560 is that first area, and you could argue that there is another minor level inside of there at around 24,644, maybe a little bit shallower, but I mean for the most part that's been a pretty nice area. So 24,644 is a nice zone of interest. As far as support goes, 24,256. After that, 23,966, of course, 24,000 is smack in the middle of that. And again, same situation. We have a nice spike in channel formation that ripped up. If it does want to break down, we could be looking for a move all the way down to 23,380 or so. So it's a pretty wide open door if these levels of support starts breaking down. Something to consider. Don't get too caught up in the fact that today was a bear day, but we also have to pay attention to the fact that if some of these levels of support break down, we've got a lot bigger issues to deal with, and it is something that we do need to keep in the back of our mind. And then we've got the Nasdaq. Now the Nasdaq is arguably the one that got hit the hardest today. We opened up the day, Nvidia was down like 18%, Amazon was falling, everything was falling apart. The markets got absolutely crapped on this morning, and most of it was from the tech sector. So it's not a surprise to see the Nasdaq getting a little bit hammered today. We can see that they tried breaking above that falling resistance from a much larger channel earlier. They tried breaking above it, holding it as support, holding, and then they finally let go, held it as resistance, and then we had that massive breakdown. We don't have support for a little while, though. Support, nearest support on the Nasdaq is going to be at the 61.8 and horizontal support zone, right around 66.35. We'll just cut it in the middle and say 35. If that breaks down, we're looking for a follow-through move down to the next major level of support, which is at 65.80 half, which does also have a major 786 support, as well as the swing low from earlier, all kind of coming into the same place. And that's right around 65.87 or so if we kind of split it in half. Give or take about 10 points in that range. But again, same problem that we're seeing across all of the markets. If that lets loose, the next level of support that they have to work with is all the way down here at 65.28 half. And if that lets loose, well, then we've got a move potential all the way down to 6,400. So really the big thing here is what does the market want to do? Is it going to bounce here, or is it going to have a little bit of consolidation and then a continuation breakdown? I mean, in all honesty, and this might just be my personal bias because I want to see these things fall apart, but it's not looking great. The lower high, the heavy sell follow through, it's looking like sellers are trying to put in the top on this market. Now, that said, we don't have confirmation of that. So it doesn't matter how, embedded I am to the sell side. That's irrelevant because the markets haven't proven that the sell side has a chance yet. In order for that to happen, we need to see something like, well, this is what we have right now, a lower high. We need to see a lower low and preferably a break of a previous major low, right? Start showing us a trend shift, lower highs, lower lows. Start holding those levels, forming bear channels, forming bear wedges, showing us that the bears are actually taking over. I love the sell side, and I love the fact that the sell side has such a huge open door, but without that excess confirmation, well, we really can't jump on board too heavily because there isn't enough proof to do so yet. early sellers, you do have a shot, and there's a big wide open door for you, but it's just a matter of whether or not it's going to be able to follow through. A couple areas of interest: horizontal resistance coming into play with falling resistance and rising support turned resistance right at around 67.50. They're sitting on top of support right now at 66.89, a little bit through it. Currently prices at 76.5. Next level of support is going to be right there at 32.5. Below that, major support right at around that 6,600 level, just underneath it by about 20 points, 65.80 to 90, that 10-point range. And then again, 65.28 and then 63.78. So should be very interesting going into the upcoming few days, but this is the way that my charts are laid out at the moment. We'll just kind of have to see what the markets want to do, but I'm not really sold on the sell side yet. Bad pun. I need a little bit more continuation to really prove, drive the nail in the coffin, if you will, really prove that the sellers are taking over. So that's going to be the long-term analysis, or I guess kind of mid-term analysis of the markets, of the U.S. index markets, that is, the S&P, the Dow, and the Nasdaq. They've got a lot of open space to the downside, but they do not have proof yet from the sellers. We need a little bit more juice to the downside before we can really complete that. That's going to do it for this one. I hope you found it useful, interesting, or at least entertaining. Maybe a couple of these levels you can add to your tool belt. But aside from that, I hope you had a fantastic trading day today. If you have any questions, comments, or concerns, feel free to send me an email, jbrink@slingshotfutures.com. As always, underneath the video, throw a thumbs up on the video to show us that you like the content. Of course, subscribe to the channel so you don't miss any of the content. We usually post every day, and we've got a lot of good content that's coming out. Might be a little bit biased on that, but I think it's pretty good. And then, of course, just to make sure that you don't miss anything, click on the notification bell icon to the right of the subscribe button so that you're notified every time one of those videos comes out. Those YouTube algorithms can always be a little bit weird. Enjoy. We'll see you in the next video. Thanks for watching. Have a good one. We'll talk to y'all later. Thanks.